Position sizing or trade sizing, it's just a fancy way of saying how much money do I put on this trade. So in this short lesson, we're going to look at exactly how you accurately calculate this. So we understand the importance of the golden rule by now, that we never risk more than 1% of our trading account on any one trade. But how do we actually make sure that we cap our risk at 1% on each trade that we execute? Well, we use something called a stop loss order. A stop loss is simply just an order placed with your broker that closes a trade if it moves against you and then reaches a predetermined price level that you set. As the name indicates, a stop loss is designed to stop any loss after a certain point. So each and every time that you place a trade, you must also enter a stop loss order. That way, if the market moves against your position, it can only move so far before the trade is taken off the table for a small calculated loss. Position sizing is the link between these two concepts. Every time we enter a trade, we have to do a quick calculation to work out what lot size we will use that is in line with our risk parameters. Fortunately, there are some online calculators and apps that can help you do this, so it does not require any math skills whatsoever, and some brokerage platforms even do the work for you, making it super easy and quick and almost fully automated. So let's hop on the charts and run through an actual trade example so you can see just how easy it is to size up a trade. Okay, so position sizing in reality, it's a pretty, extremely simple process to be honest. So when you are on your charts and let's say you have identified an area in which you want to take a trade and you obviously know where you want to get into the position and then you know where you want to place your stop loss. So what you can do is on the left hand side over here on the toolbar, if you open this up, you will see there's two options, one for a long position and one for a short position. So if you haven't done so already, I would highly recommend that you click the star on each of these and I will add it to your favorites toolbar, wherever your toolbar is within your chart. So I always have it up here. Now let's say we're going to take a long position, so we'll click on the long position tool and then let's just say we wanted to enter down here, right? Now this is probably what it will look like if you still have the default settings on your risk to reward tools. And essentially what this represents is this line here in the middle is your entry price, right? So it will show the price on the right hand side, and then this will be your profit target, right? It shows you up here, and then this will be your stop loss. So what you can do is just adjust these to wherever you want. So let's say our stop was going to be just below here, and then we're not going to worry about the profit target for now and risk to reward ratio, as this is something that we're going to discuss in a hell of a lot more depth in the trading and edge module. So essentially, this is where your entry is going to be, and this is where your stop's going to be. You can double click it and open it up, and you can play around with the settings a lot more. I don't use any of this. I wouldn't recommend it. I'll show you a much better lot size calculator to use in a minute. I'm not even sure how accurate this thing is. I've never really used it, to be honest with you. But if you want to adjust your entry price just a little bit, you can also play around with these in here to get it super accurate, or obviously type it in manually. And then again, the exact same thing. You can adjust the price level of your profit level, your take profit, or your stop level. You can adjust it by the price there, or this is the size in ticks. So ticks is essentially I guess 10 times bigger than your pips. So when it says 30 ticks, what that actually means is 3 pips. So if you wanted to put a 10 pip stop in, for instance, you would just put in 100. But for the sake of this example, let's just stick with a 3 pip stop loss. And yeah, let's just say this is how we want to size the trade up, and we're all ready now to enter this into our broker. So we would put, obviously, for our entry 1.1735, and for our stop we would put in 1.1732. So the point of this video, right, is to know, well, how much do we put on the trade, right? How much do we bet? What lot size do we use? So this is where we then use a lot size calculator. So quite a common one, and one I'll post a link to below this video, is for a position size calculator on my FX book. But if you literally type into Google, Forex position calculator, there are tons on there. So the first thing you need to do is obviously select the currency pair that you are trading. So in this case, we're already on euro dollar, as that is the pair that we are trading. And then you need to put in the currency that your account is denominated in. So it only does the major 8 currencies here. But let's say we have a US dollar account, and then let's say we have a $100,000 account. And then let's say we just want to risk 0.5%, right? So you just put in your risk ratio, however much you want to risk, and then our stop loss size in pips. And then that's it. It basically just calculates your position size when you click calculate. And then what this shows you is the amount of money that you are risking, right? So that makes sense. 0.5% of 100 grand is $500. So yeah, that's exactly how much I want to risk. And then this tells you your sizing. So this will depend on your broker. The majority of brokers still use lots, but some use units. I believe Oanda does use units, but there's a few out there that do. But yeah, lots is the most common one. And this obviously tells you that if you want to risk $500 on euro dollar, then you need to use 16.67 lots if you have a 3 pip stop loss size. So what that means is if you lose those 3 pips with that lot size, that will equate to a $500 loss. So yeah, whenever you kind of get your lots here, just quickly check this kind of this row here, just as a quick sense check, because sometimes you can put in an extra 0 in your account balance, or sometimes you put 5% instead of 0.5 or whatever. If you make a mistake or anywhere in here, this is a good little sense check, because you should know in the back of your mind, roughly how much dollars you are intending to risk. And yeah, that's it really. There's not really too much else I can add. You can obviously just swap this, you can put money there instead of risk, but I would just keep it this way, and that would be it. So then you would punch into your broker, 16.67 lots. And if you can't go down to a certain decimal place, sometimes this will give you 3 decimal places. Then remember just to round down, just so you end up risking slightly less rather than risking slightly more than you had intended. So yeah, that's pretty much it. Play around the settings. One thing I would advise as well is to get rid of this red and green. It's just like a casino thing. You might not think it makes a big difference, but those colors are literally psychologically designed to invoke greed and fear. So when price is moving a stop loss, it can make your blood pressure and your heartbeat rise a little bit faster, and can lead to those impulsive, primitive sort of decisions and mistakes. So I've saved a template for different kind of timeframes and stuff, which we'll get into a bit later. But essentially, I prefer to have a lot more sort of neutral colors. Just you can barely see it on the screen there. And blue, you can, if you double click it and go into style, you can play around with all of the settings in here and just pick whatever you like. And obviously, you can get around with whether it has the compact stats mode and not. But yeah, we'll get into risk reward and profit targets a little bit later, but that's all I really kind of wanted to cover now, in terms of this is where your entry is, this would be where your stop is, and as you can see as well, it shows you the different size of your stop in pips. So let's say you had a 4 pip stop. Again, that's just what you would punch into your position size calculator, and it will give you a slightly different lot size, and that's it. And then I think that's everything I wanted to cover. So pretty simple. If you've got any questions as always about this, or you need a little bit more help with trading view or any position size calculators, then as always feel free to drop a comment below the video, and I'll see if I can give you a hand with that. Now, sometimes when you log into your brokerage account, you may notice that you've actually lost slightly more than you had risked on a trade. And this is something that needs to be monitored closely in your journaling process. Now, here are some of the most common causes of excess losses. Trading exotic pairs. So if you're trading an exotic pair, your probability of a loss greater than what you predetermined is increased due to the high spreads and the low volume that is associated with those pairs, because it could cause your order to be filled at different prices to that which you set in the original order. So make sure you avoid exotic pairs by ensuring that both currencies in your chosen pairs are one of the major 8. Slippage, so this is when the broker fills your order for a different price than what you set in the initial order form. So that's pretty much what can happen when you trade exotic pairs. There can be a number of causes for this. It usually happens if there's large volatility from a news event, where liquidity can often be much lower. Unfortunately, it's just an unavoidable part of trading, but it's just the cost of doing business, and it will not be the difference between you being profitable or not. Sometimes it can even work in your favor if price slips past your take profit order and closes you out for a more favorable price than you had actually originally targeted. Now, if you're ever curious as to why a particular trade may have lost more than you had risked, you should email your broker with the details, and they should be able to confirm it for you. Rounding error. So this is a human error made in the risk management process. So to be safe, you should always round your trade size down instead of up. So let's say your required pip value is $3. It's best to select a trade size that exposes you to $2.90 per pip, rather than a size that exposes you to $3.10 per pip, for example. So if you use the calculator that we just looked at, and it says to use 0.275 lots, if you cannot enter a lot size to 3 decimal places with your broker, then just round it down to 0.27, right? Rounding down always helps with that, because this really can add up over a large series of trades. And the final common cause of excess losses can just be down to broker error. And this is when you're triggered out for a loss when you should not have been. So it's rare, especially nowadays. Brokers are, they're pretty good on this stuff. But if you are skeptical about a certain trade, then you should contact your broker with the details. If it is an error on their side, they will often refund your loss. But again, this is very, very rare. So as long as you are using a reputable and regulated broker, it's extremely unlikely that this will ever happen. So it's not something you need to spend any time really being concerned or too worried about. Okay, so yeah, that wraps up this lesson. Hopefully by now you should know how to correctly size your positions so that your trade risk is always capped at 1% or less.